This is Ivan Sherman. He is one of the most remarkable traders who shocked the trading world in 2023. To be specific, at the age of just 40, this Argentinian trader won the World Trading Championships, beating 5,000 of the world's best traders. Yes, you heard me right, 5,000 competitors. And what's even crazier, he didn't just win, he crushed the competition with a staggering 491.4% return. That means he multiplied the S&P 500's performance by 20 during that same period. Moreover, he beat the second best trader in the world by more than 200%. That's absolutely insane. He applied a simple yet revolutionary strategy, but here's what makes today's video special. We're not discussing the method that's been circulating online since his championship win. That approach has been analyzed to death by countless traders. Today, I'm revealing a fresh strategy that Ivan has recently developed, one that remains completely under the radar in the trading community. While everyone else was chasing complex indicators and mystical patterns, Ivan discovered something hidden in plain sight, a divergence pattern that occurs when markets panic, but not quite as much as they should. Ivan believes that markets reveal their true intentions through emotional disconnects. To validate his new thesis, he has developed a mechanical system that could become legendary among professional traders. He focuses on one specific pattern. When the S&P 500 makes lower lows, but the VIX, the fear index, shows diminishing panic, this creates what he calls controlled panic moments. This new approach is becoming known as the VIX Divergence strategy. When traders implement this system correctly, they are achieving incredible results with a 75.3% win rate and an outstanding profit factor of 3.16. That means for every dollar lost, the strategy generates $3.16 in profits. These numbers come from extensive backtesting spanning from 1957 to 2018, covering over 60 years of market data and multiple economic cycles. Now, if you're like me, you're thinking, how did he do it? Well, I decided to look for the answer to that specific question, scavenging the internet and interviews for the strategy he used to get those massive gains. And oh, did I find something really interesting. And I gotta say, Ivan is an absolute genius. I'm gonna share it with you guys, so leave me a thank you in the comments. Let's get straight to it. Before jumping directly into Ivan Sherman's strategy, we need to discuss the core principles he used. Wait for double panic patterns. Enter when fear diverges from price. Exit systematically above moving averages. Trade market psychology, not predictions. The main part of his new theory is based on one crucial concept. When markets fall twice but fear diminishes on the second drop, that's where the real opportunities hide. Let me show you exactly how this works on a chart. Here we can detect when the S&P 500 creates an initial low with corresponding VIX spike. The fear index shoots up significantly, exactly as expected when markets decline. But watch what happens next. When price makes an even lower low, the VIX actually rises less than during the first drop. This creates what Ivan calls a fear exhaustion pattern. Think about this logically. If stocks are falling further than before, panic should be higher, not lower. But instead, we see this fascinating divergence where people are getting tired of being scared. Now let's see step by step how Ivan Sherman specifically uses VIX divergence patterns in his latest approach. First, let me introduce you to the key players in this system. We start with the VIX, the fear index that measures expected market volatility based on S&P 500 options. When this indicator spikes, it means people are hitting the panic button hard. The VIX doesn't predict the future, it simply tells us how terrified everyone is about what might happen next. The strategy plays out on the S&P 500, the index that tracks America's 500 largest companies. When Apple sneezes, Microsoft catches a cold, and the entire S&P 500 feels it. Next, we're using Bollinger Bands, which act like guardrails for price action. We set these to 30 periods with a simple moving average in the center and two lines running parallel above and below, separated by two standard deviations. When price touches these bands, something unusual is happening. These bands help us measure when price has wandered too far from its normal behavior. And finally, we have the moving average, the trusty 30-period simple moving average that acts as our trend filter and exit signal. This system is designed to capitalize on moments of controlled panic, and it all starts with detecting what Ivan calls the double scare pattern. Step 1 is identifying when the S&P 500 falls twice, with the second drop creating a new low, meaning it breaks below the previous low point. But here's where most traders would jump in too early. Ivan waits, because the real magic happens with what the VIX does during these two drops. During the first decline, the VIX shoots up significantly, exactly as you'd expect when markets are falling. But here's the fascinating part. During the second drop, even though the S&P 500 falls to a new low, the VIX rises less than it did during the first drop. What happens here? The divergence tells us something crucial. People are getting tired of being scared. The market has cried wolf one too many times, and fear is becoming exhausted. Well, Ivan also used Bollinger Bands as a filter. The price must be trading within the 30-period Bollinger Bands when this divergence occurs. This ensures we're not entering during extreme volatility periods. Once both conditions align, the VIX divergence and price within the Bollinger Bands, we enter a market order at the opening of the next candle. Ivan's exit strategy was equally systematic. We close the position when price moves above the 30-period moving average, which is the center line of the Bollinger Bands. Alternatively, if price breaks below the lower Bollinger Band, we exit immediately to protect our capital. What Ivan discovers is that we should first detect this specific divergence pattern following market declines, that is, downtrend creating lower lows, but we need the VIX to show diminishing fear on the second drop. When this pattern emerges and price is contained within the Bollinger Bands, that's our entry signal. Let me walk you through exactly how this played out in real market conditions. Here we see the first decline with its corresponding VIX spike. Then when price makes a lower low, but notice the VIX reading is actually lower than during the first drop. This creates our perfect divergence setup. We enter our long position at the next candle's open. In this case, what happens? As you can see, price doesn't hit our stop loss because this divergence pattern was legitimate, and now we simply wait for our exit signal. Ivan tells us we should let our trade run until price closes above the 30-period moving average. At that exact point, we take our profits. Let me show you 3 more examples so you can really see how consistently this pattern works. Here's our second example, and this one is particularly clear. Notice this initial decline where the VIX shoots up significantly, exactly what you'd expect during market stress. Then we get this second drop that creates a much lower low, breaking well below the previous support. But watch what happens with the VIX. Instead of spiking even higher, it actually shows less panic than during the first decline. This divergence is our signal. We enter the trade and ride it up beautifully until it closes above our moving average for a solid winner. But first, I want to thank our amazing community. We selected the user who helped another community member, and we're gifting them 1 free month of Flux charts, because that's how a community should work, by helping each other out. Please reach out to our email to claim your free subscription. Now, if you haven't heard about Flux charts yet, this is the platform I use every single day for my trades. It completely changed how I trade. Flux can run screeners on up to 15 tickers and timeframes at once, so instead of flipping through charts, it tells me exactly where my setups are happening. They have backtesting tools to build custom strategies and test them against years of market data in seconds, so you know if a strategy works before risking any money. Here's the best part. 90% of their indicators are completely free. Plus, you can use Flux charts even with the free version of TradingView, which is huge because you can use multiple indicators simultaneously, avoiding TradingView's 2-indicator limit. They also host daily live trading classes teaching strategies, risk management, and trading mindset. Can't join live? They have a full library of recordings. Click the link in my description and use this code to discover the fantastic promotion I got for our community. Alright, let's get back to the video. Moving to example 3, we see this pattern during what many would call a volatile market period. Here's the first minimum with its corresponding VIX reading showing elevated fear. Then price makes this significantly lower low. Most traders would expect terror in the markets. But notice the VIX level during this second drop. It's considerably lower than during the first decline. This tells us that selling pressure is becoming exhausted. We enter our market order and watch price climb steadily upward for another profitable trade. Our fourth example demonstrates how this works even in choppy market conditions. First, we have this decline with moderate VIX elevation as traders show concern. When price breaks to new lows on this second drop, the fear index barely registers compared to the initial decline. This counterintuitive behavior is exactly what Ivan's system captures. When fear fails to keep pace with falling prices, reversals often follow. The trade plays out perfectly as price recovers strongly above our exit level. Ivan tells us we should let our trade run until price closes above the 30-period moving average. At that exact point, we take our profits. According to Ivan's extensive testing from 1957 to 2018, this strategy achieves a 75.3% win rate with a profit factor of 3.16. We gain significant profits following this approach that so many other traders overlook, but with which Ivan continues to refine his market mastery. Ivan also notes that this type of strategy works particularly well during post-election years, when markets experience heightened volatility and emotional swings become more pronounced. Now, before we wrap up today's video, I want to ask you something important. While we've covered Ivan's new VIX Divergence strategy today, I know many of you are wondering about his original championship-winning method from 2023. Here's the thing. Ivan never actually revealed his complete strategy, especially his stop-loss methodology. All those analyses online are incomplete because they're missing this critical component. If you want me to conduct extensive backtesting to reverse engineer his exact championship strategy with proper risk management rules, let me know in the comments below. If I see enough interest, I'll dedicate an entire video to uncovering the missing pieces of his World Championship methodology. Thank you all for your support, and see you guys next time.